Hi, this is Madhu Jain. You are watching my YouTube channel Funds Guru, and today's topic is mutual fund. Today I am going to give you some basics of mutual fund. What is a mutual fund? A mutual fund is a financial product or financial instrument where deposits are pulled from various people and invested in different markets like share market, money market or debt market. So the risk is minimized by investment in different markets. Say you want to invest in shares, but you don't have the sufficient knowledge of share market, because the share market is very volatile. If you invest all of your fund in share market, you might lose your fund, you might not get any return in short term. So how you can get the benefit of share market, and also you can minimize the risk, and suppose you want to get an average of 12% of rate of return on your investment. So mutual fund is a correct product for you, because in a mutual fund what it is done is that the fund is investment in different securities like that instrument also, which gives you 6 to 7% of rate of return, and also money market instruments which also gives you same kind of rate of return, and the share market will give you high rate of return. On an average you will get 12 to 15% of rate of return on a year basis. But if you only investment is share market, then if it is in a bearish trend you might lose your money, and if an investor doesn't have that expertise of invested in share market, so I suggest him to choose a mutual fund product and invest in a mutual fund product. So investing in a mutual fund product reap you the benefit of share market and also give you good return. There are basically two types of mutual funds: open-ended mutual fund and closed-ended mutual fund. What is an open-ended mutual fund? As the name suggests, open-ended mutual fund is a fund where you can invest in a fund or you can move out of the fund easily. There is no restriction. And in a closed-ended fund, you have to invest your fund for a fixed term, say 3 or 5 years. Before that, you cannot move out of that fund. And if you move out of that fund also, you have to bear some penalties. When you invest in a mutual fund, you have to keep in mind various parameters like beta value, alpha value, Sharpe ratio, and also expense ratio, and sometimes exit load also. What is a beta value? Beta value of a fund is the percentage by which a mutual fund will move up or down relating to the market index. Actually, beta value is calculated based on S&P 500 index. When the S&P 500 index, it is a Sensex like term. Actually, the S&P 500 is based on London Stock Exchange, and if the S&P 500 index moves up, then beta value shows you that how much percentage your funds will or mutual fund will move up or move down. If the beta value is 1, then by 1%, if the S&P 500 will move by 100 points, your funds will also move by 1% of that 100 points. And if it moves down by 100 points, your funds will also move down by 1% of that 100 points. There is also alpha value. Alpha value is the expertise of that fund manager, which actually saves you from the sudden bearish trend of a index. So it gives you the parameter, or it gives you the measure how you can get the fund manager's expertise of getting good return in future. And expense ratio is the ratio which tells you how much percentage of commission you have to pay to your broker. Exit load is also a penalty which is imposed on you if you move out of that closed-ended mutual fund. When I am telling you about two broad categories of mutual fund, there are subsectors like equity mutual fund, which actually invest all of the money in equity, debt mutual funds, which invest all of the fund in debt instruments, or hybrid funds, which invest in a mix of mutual and equity and debt market instruments. And also ELSS, popularly known as tax saver mutual fund. Tax saver mutual fund is kind of equity mutual fund where entire fund is invested in equity mutual funds.